Good morning, everybody. We still have several people joining us, so I'll give a minute to let the room fill up and then we'll get started. Yes, we'll be sharing the recording later. Okay, we're going to go ahead and get started. There might be a few more people join us as we go. So welcome to QuickBooks for Manufacturers, hosted by the Arizona Manufacturing Extension Partnership. As we go through this, you'll have an opportunity to ask questions. You can do that on the Q&A link, as some of you have already found. We'll try to get through all the questions. And then, as I just mentioned, we're recording this. So you'll be able to see a recording or go back and see something you may have missed or something you want to hear again on your own time. And then also, if you'd like to connect with us or Susan at a later date for individual work, feel free to contact the Arizona MEP. You can contact your advisor if you know who that is. And I'll share those with you in a minute. Or you can contact us at azmep.org or the phone number you see on your screen. So I'll quickly give you a quick overview of the Arizona Manufacturing Extension Partnership. Simply put, our mission is to make every Arizona manufacturer the most successful business it can be. And we do that as part of a nationwide network in all 50 states and Puerto Rico. We're overseen by NIST. And NIST takes measurements of clients that we work with. When we do projects, they do a brief survey and then determine the impacts that we've had and how we've helped. And on a nationwide basis, you can see here what the national network has done last year. Basically, 114,000 jobs created or retained, 15 billion in new or retained sales. A big one for us is cost savings, 1.5 billion in cost savings for our clients, and 4.5 billion in new client investments. When polled, our clients, what our clients' biggest challenges are, cost reduction is by far the largest. We help them through continuous improvement, lean manufacturing projects. The other one is employee recruitment. As you in the Valley have seen over the last couple of years, it's tough to find good employees. And that's one of the biggest requests we get is to help our clients find employees. And we do that through some third-party staffing agencies that we work very closely with. Over here, the Net Promoter Score on the survey that I just mentioned, the clients are asked how we are to work with. We shoot for a 9 or a 10. As a nationwide network, The average is 85 or 8.5. So very good, easy to work with. We do where you need help. We encourage you to reach out where you feel you need help, or if we can help you in certain areas, and then we can see how best to do that. Some of the areas that we help in, as I mentioned, continuous improvement and lean. Staffing is huge. It was huge before the pandemic, and it's just as big right now since there's been so much movement and turmoil. We also help with ISO certification, safety training, and other things that you can see here. And then in the areas more strategically in business excellence, we help uncover hidden money in your business. For example, R&D tax credits. There's money that many businesses don't realize that they're eligible to get via tax credit. Utility tax exemption. In the state of Arizona, manufacturers are not required to pay utility tax on their SRP, APS, Southwest gas bills, but many of them do. We can help you get that stopped and get money back, going back as far as 4 years. So if you have any questions on that, you can reach out to us for help there. Here's our team. Most of us are senior client advisors like myself. We also have our director, and then Kevin O'Shea, who heads an award-winning export tech program. That was on the previous slide. So if you're looking to expand your business outside the US, we have a great program for that. Contact us and we can help point you in the right direction there too. So with that, I would like to introduce our speaker today for QuickBooks for Manufacturers, Susan Bedell. Susan is the co-owner of A-Team Accounting located in Phoenix. Susan, her husband Bob, and their staff have been serving business owners in the Valley and beyond for over 20 years. She's a member of the QuickBooks Pro Advisor Program and has used all versions of QuickBooks, including desktop, online, and enterprise editions. So with that, I'll turn it over to Susan.
Thank you, Jim. Good morning, everyone. It's my pleasure to be here and to share some tips and tricks with you for QuickBooks as it relates to manufacturing. If you have a question, please do post it in the Q&A section. And at the end of each section of the presentation, I'll look at those questions and do my best to answer them. If I can't answer, then I'll be sure to follow up with you at a later time. So again, I do appreciate the fact that you're here and look forward to sharing this information with you. So let me switch over to screen. There we go. Okay, so the versions of QuickBooks that we will be discussing are the Premier and Enterprise editions of the manufacturing and wholesale QuickBooks. So QuickBooks has a number of different versions as it relates to industry. Way back in the beginning, they did not. They had just a basic platform, and then from there, it's grown into several different platforms. And so we'll be focusing specifically on Premier and Enterprise Manufacturing Wholesale Edition. So why QuickBooks for inventory? Well, many small businesses don't know the number of units they have on hand or on order at any given time. Inventory, quite honestly, is one of those things that as an accountant, I see a lot of businesses struggle with. It can be rather labor intensive. It can be rather, it can be a pain point. But as you know, when you're a manufacturer, inventory is so critical to managing your books, your numbers, your profitability. And with QuickBooks, you'll be able to know the number of units you have on hand or on order, tracking the value of your inventory at every point in the process. And also, I'm going to pause for just a second because I want to turn off my audio, so I apologize here. Let's take a little tech break. Okay, there we go. And so, the biggest thing that I see again with companies that struggle with their inventory is timing. Timing is everything with inventory. The inventory cycle is so important and critical to the accuracy of the information. So for everything from the ground up, right? So purchase orders, order acknowledgments, item receipts, and bills. Those are the things that drive inventory from the production side. And then obviously, the other side would be the sales side that affects and impacts inventory as well. Not only sales, but also possibly returns, exchanges, that kind of thing, which hopefully aren't the norm, but they do come up. So QuickBooks is able to handle all these different events very, very well. So the one thing to keep in mind about the way that QuickBooks manages the production side of things is that purchase orders are non-posting. And what that means is you log it into QuickBooks, you record a purchase order, and then QuickBooks keeps track of it for you, but it does not do anything to your inventory. It does not affect your numbers, because a purchase order is just that. It's an order that you've placed with a vendor, and you haven't received those goods yet, but you do have them on order. So QuickBooks has a number of reports that allows you to track the purchase orders that you have out there and the ones that have been that are still pending. Order acknowledgments are also important because that's how you confirm with your vendor the pricing and the quantity. And so you generate a purchase order, rather, send it to your vendor, and then they give you an order acknowledgement. And this is very important because you want to check your pricing. You want to make sure. Yes.
This is Jim. Hey, we're not able to see your screen.
Oh, I'm so sorry.
The screen share.
Okay, I'm so sorry. So let's see. I clicked share screen. Okay, let's see here. Were you able to see it at all, or?
No, it never came up.
Oh, I'm so sorry.
I thought that might have just been me, but then I saw participants saying the same.
Okay, I'm so sorry. And I didn't look at the Q. I haven't looked at the Q&A, so I apologize. I appreciate you letting me know. So, okay, I see what I need to do. Okay, is that better?
Yes.
Okay,
Yes,
so let me
just
switch back to.
Present.
Yep. Okay, is that better?
Yes, perfect. Thank you.
Okay. I'm so sorry. Thank you for letting me know. We're all learning as we go with this, with Zooms. Okay, so getting back to purchase orders and then the order acknowledgement. Order acknowledgement is very important because that is what confirms your pricing. And so if you place an order and you're requesting goods at one price, but you get the order acknowledgement back and the price is not the same, it could be slightly more, maybe based on quantity or whatever. You want to be checking that. And then another thing that QuickBooks has that is really terrific for acknowledging and keeping track of the inventory that you have received are item receipts. And so item receipts are posting and they do affect your inventory. And the difference between an item receipt and a bill is that the item receipt really is designed to record the liability associated with the inventory, and it also affects the inventory. So an item receipt is a posting transaction. And so item receipts may be better than bills because they tend to lag behind and they might affect the real-time accuracy of what you're seeing in QuickBooks. And then bill is something that you create off the item receipt, and then that is what you use to generate your vendor payments. You can bypass the bill and strictly pay from item receipts, but I don't recommend it. And the reason for that is the bills that you receive from your vendors have a very unique invoice number, and QuickBooks will let you know if the bill number has been duplicated. So let's see here. Oh, sorry. There we go. All right, so we're back on screen. Everyone can see. And so I will just jump back and see if we have any questions. Bear with me a moment. So we are back. Okay, so let's jump into inventory costing. Inventory costing in QuickBooks, the desktop edition only uses average cost method to determine the value of inventory. So the average cost of inventory is the total of items currently in stock divided by the number in stock. And that average cost can vary based on, you know, changes that you make. Maybe you change the vendor that you're purchasing from and their price is less or more. So there's a bunch of different variables that go into that average cost method. That is an industry standard method, but it might not necessarily be the best one for your particular business. So there are some add-ons that you can use that will be customized to the inventory costing system that you and your accountant find are best for your particular business. In Enterprise Edition with a Platinum subscription, you can still use the average cost method, and then FIFO, first in, first out, is also an available option. So the costing method that you use is very important because that is that determines how QuickBooks gathers the information, and more importantly, the costing method, it drives two things really. It drives your the cost of your inventory that sits on your balance sheet, and then it also drives when the inventory is sold and inventory is relieved. So you sell, you sell to a customer. The cost that QuickBooks has at that point in time is going to be the cost that is moved from the balance sheet to cost of goods sold on your P&L. And if the average cost at the time that an invoice is created is not accurate, then it has just a real domino effect. And so again, going back to timing is everything in the inventory cycle, it's super important that you determine for your particular business what the timing needs to be, who is going to be doing what when, and when are the entries going to be made. Because quite honestly, as an accountant, I have seen and I have worked with clients to fine tune their timing, because I have worked with companies where the data entry pile was very high. And so someone wasn't keeping up with receiving the inventory, the invoicing got behind. Again, it's a cascade, it's a domino effect. And so it's very important that whoever has the responsibility for doing the posting and the entering is on it. So let's go to the next slide here. Jump back and see if anyone has questions. No questions, okay. All right, so here is a sample inventory report, and it's a valuation summary. You can see that QuickBooks provides a lot of information about inventory. The first section of the report shows inventory parts, and so QuickBooks is very good about grouping everything together in the different categories. So inventory has a bunch of different categories. We won't go into those now, but I mean, there's parts, and then there's non-parts inventory, or non-inventory parts rather, and then assemblies, which we'll talk about in the next, I think it's the next section. As you can see on this report, it gives you just, this is the lowdown on, how the inventory is valued. And it's a good idea to be checking this on a regular basis, because if, let's just use cabinet pools as an example, the first line, if the average cost swings one way, from one way to another, then there's obviously something that needs to be looked at. And on this report, this is a screenshot, so I can't actually do it, but on this report, you can drill down into pretty much, I know the on hand you can drill down, and the value you can drill down, and it will show you all of the activity. So let's just say, for example, on our cabinet pool, our average cost is usually around $250, and all of a sudden we run this report and it's $5. Well, why did that happen? You can very easily go through and see what, where the discrepancy happened. Did someone receive the wrong quantity? Did someone enter the wrong cost when a purchase was made? There's many different scenarios, and so it's a good idea to be monitoring this, especially when you're implementing any changes with how your inventory is done, or if you have a new person that you've brought on that is responsible for some or all of the inputting. You want to make sure that you're monitoring what's going on in the work that they're doing, because you can coach them up on what needs to be done differently, so that inventory is accurate. So I think we have a question. How does it determine what category it goes into? Okay, so the way that QuickBooks determines what category an item goes into depends on what the item is. And so QuickBooks has inventory parts, and I'm going from memory, so bear with me. It has inventory parts, it has non-inventory parts, it has assemblies, and I'm trying to think if there's anything else, but anyway, it really, to answer your question, Greg, it really depends on what type of an item it is. And so if it's a finished item, meaning it goes just straight into inventory and then it's resold, which can't imagine for manufacturing that would be the case, then it would go in just as an inventory part. But for manufacturing purposes, let's just go with raw materials will be inventory parts, and then you'll create assemblies from those inventory parts. And the same inventory part obviously will be used or can be used in several different assemblies. So it just depends on what the particular build is, which we'll get into shortly. All right, and is average cost calculated date specific? Yes, it is calculated date specific. I believe that if you generate a report on 2 different dates, that it would do that for you. So yeah, I believe that would you would be able to do that, and then you would be able to see the swing. And then you would also be, if there was a swing, and then you'd also be able to see, again, drill down on why did it change so much from that date to that date. So yes. Okay. So okay. I am not able to change my slide. There we go. All right. So advanced inventory tracking, as we said, QuickBooks Premier is great, and it does a very fine job for a lot of the basics that are needed. But when it comes to advanced features such as serial number, lot number, and location tracking, there's no specific fields for that in Premier. There are custom fields that you can create, but I caution use on those because they are specific to, custom fields are specific to either a customer, a vendor or an item. And so it's a way of breaking down those items into specific groups. But as far as, you know, formal serial number, lot number, location tracking, no, it really wouldn't work. In the advanced inventory subscription for enterprise, you can do all of these: serial number, lot number, location tracking. However, you cannot do serial number and lot number together. You have to pick, it's either or. So good to know there. Okay, so we talked a little bit about inventory parts, not great detail about how to set them up, but this slide shows how an inventory part would be. This is the setup screen. And the nice thing about this particular screen is that you can get a screenshot of real-time information. So there's a bunch of different ways, and this is our cabinet pool again from the first slide, but there's many reports that you can generate that would give this information. This one just happens to be, you know, a real-time screenshot of the part. And so this is the setup screen. And some of the features on here that are interesting to point out are the reorder point. And so the reorder point, that's, you know, referred to as minimum. And then the max is the max that you want to have on hand. And so the reason that these are a neat feature in QuickBooks is because you can generate reports and also set up alerts so that if you're approaching your min or you've exceeded the min, meaning you've dropped below it, then you'll know and you can plan accordingly. The max is important because you don't want to over purchase. And then the on hand obviously is a good number to know because that's what you have to sell. And then the average cost again is calculated on the number on hand, as well as all of the vendor activity, the purchasing activity, and the sales activity. So it's keeping track of this real time. And then it also will show you what is on PO, meaning what's on order from your vendor, as well as what's on sales orders from your customers. And so we didn't talk about this yet, but a lot of times people will just jump straight to invoicing for generating their paperwork for customer sales. QuickBooks does have a sales order feature. So you think about PO, purchase order, sales order is the customer side of it. And so a sales order, if you use the feature in QuickBooks, you can log those sales orders so that you know what customers have on order, and then that helps you plan better, helps you manage the inventory, helps you manage production, and then you know what you need to be making. And so a sales order, just like a purchase order, a sales order is not a posting transaction. It does not impact your inventory. It does not impact your sales or your receivables, anything. It's basically, customer has placed an order with you. And then the sales order, after it's entered and it's fulfilled, then that is converted into an invoice. So I see we have some questions. All right, Greg, let's see. When you say Premier cannot track by serial number, etc., is that through the manufacturing cycle or after a build has been completed? So that would be after a build is completed, because you would assign, typically you would assign a serial number to a build, because then you want to track the serial number, who did the serial number go to, in case you have to do a recall of that item. And let's see, is bill of materials. there, is the bill of materials only available on a certain version of QuickBooks Online? We're not talking about QuickBooks Online, we're talking about desktop and enterprise. And so I'm not very well versed in QuickBooks Online for inventory at this point. Oh, okay. Okay. So I'm sorry. I believe that QuickBooks Online has a manufacturing edition. I'm not currently using it, so I can't speak to if that feature is available, but I know that the bill of materials is available in desktop, and for sure it's available in enterprise. And in QuickBooks, it's referred to as assembly, so it doesn't use the BOM jargon, but a bill of materials equals an assembly. Okay, gotcha. All right. So these are, let's see, we're going back to, this is parts. So here is an example of an assembly. And so obviously an assembly is a group of parts. This is the BOM, bill of materials. And again, with this inventory detail screen, this is actually the screen that you get when you set up an inventory assembly. But it does refer to bill of materials down here. That's good. QuickBooks is funny about the jargon that it uses because it does its best to, it uses accounting jargon, and then it also uses just, common vernacular, if you will. So it's always interesting to see where they sprinkle the jargon in. But again, on this screen, you'll get real-time information. If you look at the bottom, it has the min, the max, the on-hand, the cost, the PO, the sales order, quantities, and it refers to the min as the build point, minimum quantity that should be on hand. So what else can we talk about? So, the difference between this and the part, obviously, is the BOM. And so this is where the section is where you list out the items that make up the build. And also the quantity required for each. So, and then it brings in the average cost into the cost section. So, and then at the bottom, it shows the total bill of materials cost based on the items that you've picked and the cost associated with each. This is also the screen, this drives your accounting. So you want to make sure, obviously, that the accounts that are listed, the GL accounts, are correct. So, the two that are on here, actually there's three. There's the cost of goods account, the income account, and then the asset account for the inventory. And this is a common, it's a common mistake that I see when the setup is done, if someone doesn't really understand, what's really supposed to go there. But this is a good way to check out where things are going. There is a report that you can generate for your items that will give you all this information, so you don't actually have to go to each one to see what account they're posting to, because that would be, depending on how long your list is, that would be pretty labor intensive. But the report that I would suggest you look at, in addition to the inventory valuation summary, which is a great report because it just has all the details on your inventory. The other report that I would look at would be the item listing report, because then you can see, and on these reports, you can add columns and take away columns. And I strongly recommend, when you create a report, when you take the time to create a report, I strongly recommend you memorize it, because you can save it for use another time. And when you memorize the report, then it's basically a template, and you can pull it up in the future You can change dates. You can, totally change the template again. You can bring in columns, take away columns, whatever. But I strongly suggest that you get a solid set of management reports that you're looking at on a regular basis, or that, someone is preparing for you on a regular basis for your review, or your manager review, whoever's, in charge of inventory. But the item listing report would be super good to look at, because then you'll be able to notice any inconsistencies in terms of where things are posting. Because every time this inventory assembly is used in a transaction, these are the accounts that are affected in QuickBooks. There's literally no way for someone to change these on a specific transaction, because it's already set in stone from here. But if you do audit your item listing report and you see some inconsistencies, then there is a way to correct that. You can come to the item setup and correct it. It just depends on a few different things in terms of what QuickBooks will allow you to change and when. So we talked about timing. And timing is important for that too. But you can actually do a mass edit of things if you need to. QuickBooks does allow for that. Some other accounting programs that are batch in nature, batch accounting programs, typically you'd not be able to do that. So QuickBooks does provide a lot of flexibility, but you want to be managing that. All right. Any new questions? Is this a sub-assembly? Why no sales price otherwise? The fact that there's not a sales price on here is just anecdotal. You would want to have a sales price on here. The other reason there might not be a sales price, though, would be if you have a price list that's specific to customers. So I pulled these screenshots, and this isn't actually from a working company that I do the accounting for. It's QuickBooks demo, but typically you would have a sales price in there, and the cost would be blank, just because we have the bill of materials cost down here. So I hope that answers your question. Yeah, most likely on the demo, Greg, I'm sorry, whoever's asking the question, the sales price would be something that if you sell the same, if it's the same price for everyone, then you would want to have a sales price in there. But if you have custom price lists for your various customers, then that's why it would be blank, because you have a different table that drives the sales price that's used on invoices. Okay, so work in progress is another area that a lot of companies have issues with and challenges. In QuickBooks, there's a pending builds report, and so the pending builds report is a baseline report, and it provides a quick and handy way to see what build assembly orders are open and not yet completed. So in QuickBooks, pending builds equals work in progress. And the reason that work in progress is important is, not only from a management standpoint, because you want to know, what's next, and you want your team to be building the things that that are on order, and also, keeping in mind your minimum that you want to have on hand. At the end of the month, from an accounting standpoint, you can use this pending builds report to do a rough calculation of the work in progress at the end of the month. And so that's something that some companies have listed on their balance sheet at the end of the month, because they are things that are already made, and it impacts the work in progress balance. All right. No questions? We talked about sales orders before, just briefly, but I do suggest, and you know, most companies do use the sales order feature, because then you can you know how to look into next week, next month, to figure out what needs to be produced. And in many manufacturing businesses and job shops, there's a time delay from when a customer order is received until the product is actually produced and shipped. And so the sales order within QuickBooks will track your open orders. And it also will show you, and I can, on the screenshot there of the open sales orders by item, it will show you the quantity that was listed on the sales order. It will also show you what's been invoiced. So that's actually what's been shipped out. And then it will also show you the difference, which it calls back ordered. So back ordered is, it is literally just a calculation of quantity minus invoiced equals back ordered. And so then you'll be able to see, you know, what is still out there and what customers are still expecting. So this report will assist you with production planning, and then you can also keep an eye on open unfilled orders in the backlog. The nice thing about this report too is that you have the invoice date and also the due date. Due date is the day you promised it to your customer, or the day they requested it, and that's a field on the sales order. So this report is important for a number of different reasons. First, you know, these columns which we just talked about, but also the dates are important, because if you're consistently, you know, seeing things that are outside your acceptable range, and everyone's range of when an order is placed and when it is shipped is different. But if you have a policy within your company that, you know, I'll just use an example. At a company that I worked at, sales orders were to be filled within 24 to 48 hours. And so every morning the open sales order report was scoured, and if there was anything that was beyond that, then the folks that did the order fulfillment were checked with first to figure out what's going on. Why is this order still sitting? And so it's important to have a policy in place that states what the timing is for processing sales orders and fulfilling them. And so this report is good because it has that date, and you can see if it's outside your acceptable range, then you know that you need to research it and talk with your team and find out what's going on. And so that obviously, you know, the unfulfilled orders and then the backlog is what goes beyond your acceptable range for fulfilling those orders. And then the next report is the open sales orders by customer. And so this actually breaks it down. So this one is driven by the inventory list. And then this one is driven by customers. And so you can see by customer, you know, kind of what's out there. This doesn't have, I apologize, this doesn't have all the information to the right, because I think I didn't do a good job of cutting and pasting, but it would have the same information, the invoice, the back ordered, and the open balance and whatnot, so that you can monitor what's going on with your customer. Because, you know, the last thing you want is to be getting a call from your customer saying, hey, you know, I have multiple orders on back order, what's going on? So it's a way to monitor what's going on with each customer, and then also address it and make sure they're being taken care of. So, right. When running the shortage report on pending builds, how can I associate it with the customer or the PO that will let me know the jobs and materials are for? All right, I think there's a couple different questions in there. The shortage report. So the items that, I'm not sure, let's see here, let me go back. So these reports that we've just been looking at are actually driven by sales orders. There isn't anything relating to vendors on these reports. So to answer your question, let me go back here. So to answer your question, through the previous pending build. Okay, let me go back there. Oh, this report, okay. So your question is, what jobs and materials are for, okay. So on this report, on the pending build report, you can click on the quantity and then it will bring up the screen. I don't think there's a way to, well, you could add actually on this report, because it's coming from, let's see, because it's coming from, it's not coming from a sales order. Anyway, if you drill down on the quantity, then it would open up the detail, or you could add another column to this report that would tell you what customer this particular transaction number is related to. So I think that answers your question. Yeah, so that if you add a column onto that pending build report for the customer name, then it will tell you which customer it's for. And then you might need to dig a little deeper to see, you know, if you have a backlog, say on the next screen, then you can look at the specific items associated. You know, if you're told that, oh, we're short these items, then you can look at the item screenshot and then see what's on back order. So I believe that answers your question. All right, very good. Good question. Okay, so let's go to the next. And I just want to kind of check and see where we are time-wise. Because I had allowed a lot more time for questions. So it's looking like we're going to be done pretty early, which isn't necessarily a bad thing. I know everyone's busy and has, I'm sure you have a busy day ahead of you. So the sales order fulfillment worksheet is something that is sort of embedded in QuickBooks, and I didn't put the steps on here. I believe that it's under customers, and so this one, the sales order fulfillment worksheet brings up all your open sales orders, you know, customer orders. And in the upper right-hand corner, you can change the view, so you can sort. This one is shown by the date the sales order was entered, and there's a bunch of different ones that you can select. But basically, this sales order fulfillment worksheet allows you to see, again, where the bottlenecks may be occurring in your order fulfillment process. And so, not a lot of orders on this one. There's just one that we can take a peek at. And then you can, on this screen, you can easily choose. I see there's probably multiple ones, but for this one, the screenshot, they've chosen this particular one, and then it breaks it down for you. And it shows you ordered, invoiced, open, and then unallocated and rate. So the open, okay, so the to fulfill amount takes the open times the rate, and then that's the dollar quantity. And then at the bottom, you can see that you can also print from this screen. And also when you have the invoices open and whatnot, QuickBooks has a number of different forms that it will generate. So on this one, you can see in the lower left-hand corner, you can generate a pick list, a packing slip, and then also you can generate the sales order. So this is as I said, this is a worksheet that's embedded. It's not necessarily easily found, but I believe it's under the customer dropdown. So let's just check and see if we have a question here. It's under customers. Okay, thank you. Thank you, Colby, for answering that. All right. So our next section is the allocation of materials. So the way that QuickBooks allocates materials, it's a soft allocation. And it will reserve amounts required to fill all sales orders or assemblies. And so on this report, the inventory stock status by item, you can see again what's on hand, what's on sales order, how many are needed for assemblies, and then how many are available. So it does the math for you. And then it also lists out what you have on PO, your reorder, and your sales for the week. So if you see on the sales order column, you know, that is what customers have placed orders for, obviously. And then for assemblies, that is, those are the quantities that are reserved for assemblies. This is an interesting report because if you look at the hardware, you see that these brass hinges, we have a problem. We have a problem here because we need a lot more than we have. And so that's another, this is another one of those, you know, management reports that would be good to be consulting and looking at, because then you'll be able to see what your counts are based on everything that's been entered. And so for these brass hinges and these doorknobs, for example, there's definitely a quantity issue. And so need to figure out what happened. Where did the breakdown happen? Was it, do we really have these? And the inputting is a bit behind, or do we have a supply problem? Is our vendor behind? You know, with all the COVID stuff, people are experiencing delays in receiving materials and whatnot. So, you know, is that explained by a shutdown or, you know, some sort of other supply chain problem? Do we need to look at sourcing from a different vendor? That kind of thing. So there's a lot of you know, numbers are a great thing, but you also have to know the story behind them. So some companies need a hard allocation. And a hard allocation is where the quantities on hand are decreased and allocated specifically to an order or a build. And so, you know, basically it's moving numbers into a different column so that your on hand is affected. Now, QuickBooks doesn't have this ability for a hard allocation, but there are add-on programs that do. If that's something that you're needing. So it just, again, everything is specific to what your needs are, what your company needs are, and you know, the information that is required to manage your inventory effectively. So I'll go to our questions here. What are the main differences between Premier and Enterprise from inventory management? I don't really have a chart on that. but I will say, you know, just based on experience, that the Premier version will handle, it handles basic inventory management, you know, very well. Enterprise is, you know, the whole enterprise platform is, you know, it's just bigger and beefier than Premier, and so it has a lot more features. It has a lot more fields and things that may or may not be useful. So it just depends on you know, what the company needs in terms of reporting, and also not just reporting, but bigger picture, how best to manage. And so and one of the other main differences between Premier and enterprise platforms is the number of names that you can have on various lists. I don't have those numbers memorized, because every time they do an upgrade, it seems, you know, the capability of each list doesn't necessarily change a whole lot. It pretty much stays the same, but that's one of the main things, is the number of, from an inventory standpoint, the number of items that you can have on your actual item list. Premier has a limitation as far as how many items can be on that list, and for most companies that works just fine, because their item list doesn't exceed that max. The enterprise version allows for a ton more of items on your inventory list, and so that's, to be honest, that's one of the reasons that a lot of companies opt for the enterprise platform versus Premier. And so there are limitations on the lists, and so the lists that QuickBooks has within the program are the items, the customers, the vendors. And so once your Premier company files, you know, starts to approach those limitations, then, you know, upgrading to enterprise, you know, may be the next best thing to do. As well as the features, you know, there are different features. I don't have a ton to offer in terms of specific differences between them, but there's definitely, I know QuickBooks does a really good job of, on their site, they will put the different versions side by side, and then it will show you which version has which feature, and so that helps you arrive at a decision. It can help you arrive at a decision as to which version would be best. In Enterprise Lite and Advanced, the Advanced is really the inventory side of it is, as I said, it has the lot number feature, the serial number feature, and the location. There are others. And so again, you just have to look at what's offered in that version or that upgrade. You know, the advanced inventory in Enterprise is an upgrade. And so you just have to look at what it's offering and see if it makes sense and if it's going to benefit you. I'm not going to quote pricing or anything, but it's just based on my experience. Enterprise is very pricey, and but it does an awesome job. And so you're paying for something that's quality. So it's money well spent if you need it. I have worked with companies that did opt for Enterprise because they simply didn't know that Premier would handle what they needed. And then the downside with Enterprise is you're locked into basically an annual upgrade. And I don't know if they've revisited or rethought that, but I hope that they would, because purchasing the software, it can be anywhere. I believe that the pricing starts at around $5,000. And so if you're doing an annual upgrade, the annual upgrade is not necessarily that much, but it's in the thousands. And so you really want to make sure you're picking something that is going to manage your information and also be cost effective. So just you know, caveat always with software is look at the features, you know, is it in line with what your company needs? Will it do what you need it to do? Are there add-ons for the stuff that it won't handle the way you need it to be handled? And, you know, what's the cost for those add-ons? And how do they run? What is it, you know, then you get into the whole IT realm, right? You want to make sure that you have the right IT in place, the right support, so that the add-ons and QuickBooks can be talking to each other and communicating effectively so that you're getting the information that you need. Okay, so thank you for that question. I hope I answered it. To be honest, QuickBooks has lots of resources and, you know, free marketing stuff available that will obviously answer everything that pertains to your specific situation. QuickBooks has been around a long time. I started using the program back in the mid-90s, and back in the day, when it first rolled out, the first version I used, they were numbering them, so it was version 4. I never really saw version 1, 2, or 3. I don't know if they actually exist. But then eventually, I think it was starting with the year 1999, they started numbering the years. So that tells you how long QuickBooks has been around. Basically, at least 25 years. Don't quote me on that. It might be longer. Okay, so so if someone's asking what's the add-on that provides the hard allocation, I don't have specifics on that. But if you go to the QuickBooks site, they have a kind of a user forum. Excuse me. I don't know if the user forum is just for people, just for customers, or if, you know, if anybody, I'm thinking they've opened it up so that anybody can access it. But you would need to do some follow-up and see what QuickBooks, what plays nice with QuickBooks in terms of an add-on for hard allocations. But there are tons of apps. That's the thing about QuickBooks, is because it's you know, an industry leader for small business and has continued, you know, as I said, for 25 years, it's just been building and building. There are so many add-ons that folks have developed because you know, there are things that QuickBooks just needs help with, you know, needs support with. And just as a side note, you know, when you're looking at add-ons, if you can get a free demo, that's always a good idea before you commit to something. And when we're looking at add-ons on behalf of clients, we recommend, you know, at least 3 to 4, you know, that you look at least 3 to 4, and then figure out which is the best. And if none of them are the best, then you just go back to the drawing board. But I don't have a specific resource for hard allocations. I'm sorry. Okay. So one of the really cool features that it's an optional feature, so you don't have to use it, and it can be turned on or turned off at various points in time if you wish, is the class feature. And so class feature is helpful if you have departments, regions, or divisions rather. The class feature can be used really, it's for one purpose, not for multiple. So you have to figure out, and you need to determine what's the best way to divide up your P&L. And so for this illustration, these are the classes are in each column, and to me, it appears that they're departments, right? So they have a new construction, they have a remodel, and this is a construction company, so it's not a manufacturing company, but new construction, remodel, overhead, in one company that we've worked with, they had retail because they sold product direct to the public. They had wholesale, so they sold those same products, but to stores for resale. And then they had retail, wholesale, and then they had distributor. And so distributors bought in quantity, and then it was the type of product that could be incorporated into one of the builds that they were doing. And so those were the three classes that worked well for that particular manufacturer. So they had a retail class or division, they had a wholesale, and then they had distributor. And so you can break down your P&L by class if you wish. You don't have to. As I said, it's an optional feature. There is, obviously there is an implementation. If you decide to put this in place, you'll want to determine what's the start date for this, because then all the transactions, from that start date on will need to have a class assigned to them. And that's everything, every transaction that would affect P&L accounts. So that would be anything on the customer side. It's a posting transaction, so invoices, credit memos, returns, that kind of thing. And then on the vendor side of things, so that would be bills from vendors, credits from vendors. That's pretty much it. The column that I want to draw your attention to is the unclassified column. And so those are transactions that do not have a class assigned to them. And so, if as a company you've decided that you're going to be breaking down your P&L by department, the unclassified column is, super important, because that will show you, it will show you by line item what has not been assigned a class. And then you can click on a specific line item and drill down on it and recode those transactions to the correct class, so that when that work is finished, when you come back to this report, profit and loss by class, or whatever you decide to call this, technically, the report names in here again are designed for everyday use. It's not necessarily what you're gonna call it. And by that I mean, in the upper left-hand corner, you see that the report is on an accrual basis. And typically an accrual basis P&L is called an income statement. So it doesn't change the report, it just changes the presentation. But anyway, you would come back to this report then, and the unclassified column should disappear, because any transactions that you've reassigned to the correct department are now in the correct column, columns 1 through 3 on this report. The unclassified should drop off. If for some reason it's still there, then there's probably another, not necessarily dollars associated with it, but there may be some transactions that don't have classes that are still causing that column to appear. And there's a way to tell QuickBooks by going to customize. You can tell QuickBooks, I don't want to see columns that have 0. And the other one is, you can filter it so that this line, for example, construction income other, is all zeros the whole way across. You can customize the report so that all rows with zeros drop off. And you can also, as I mentioned, you can also tell QuickBooks all columns with all zeros should not appear on the report. So there's ways to make the report more, easier to read and kind of clear up the clutter, if you will. But profit and loss by class is a good one, so that you can see how each department or division is performing. what's not on here, but can be added again on customizing. You can add the percentages, so percentage of income. And so, for example, it will assign percentages for each line based on what the total income is. So then you'll get a percentage of revenue for each line item for that department. And same thing with cost of goods. When you add that percentage column, then cost of goods and all the lines below it, including, you know, G&A expenses and whatnot, will have a percentage of the total income line. And so then you can see how, you know, how each division is performing, what are their percentages. That looks really high. We need to look at that closer. Why is that so, you know, why is that so so much higher than, say, the previous month? And then when you add the percentage column on this report, it will also do on the total column will also percentage out, and then you can see what your overall percentages are, so that you can explore areas of opportunity. So check our questions one more time. I don't see that we have any, but I am very happy that we have managed to go through these tips and tricks. And I thank you for your questions. I thank you for your patience with technology. And I hope that this information was useful to you. I will stop my screen share. Hold on here. Oh, well, maybe I will. There we go. All right, there's Jim. And let me turn off my, oh, I turned off screen share. Oh,
Yeah,
good.
I got it.
Okay. Good. Very good.
So thank you, Susan. I just wanted to keep you here for a minute in case there were any more questions that came up the last minute. Looks like there might be one more.
Okay, I'll tackle that.
Are you going to answer that one, or are you going to type the answer?
I'm typing. Yeah, go ahead. Sorry.
Okay. So thank you again, everybody, for joining us for the workshop today. If you have additional questions or you want to dive deeper into particular topics, you can reach out to your senior client advisor. Or if you don't know who that is, our phone number is on the screen. Again, you can connect with us via our webpage as well. Or you can follow us on LinkedIn and see how we're helping other clients in Arizona to be successful. I'll leave the screen up for a few more minutes while people are disconnecting, just in case you want to copy the information down. And we did record this. Again, I mentioned that earlier. We did record it, so we'll be posting this on our YouTube page, and we'll send a link out to everybody later. Also, we typically, when we do live workshops, we typically have a survey, just so we can get some feedback and see how we did, see how we can improve. As this is our first webinar situation, we definitely like some feedback. So we're trying to put together a way to get you a survey to give us some feedback on this. So if you see something in your mailbox, probably from SurveyMonkey, we'd appreciate your feedback. Again, thank you, and thank you, Susan.
Thank you, Jim. It was great. It was great to present the information and field the questions. I hope that everyone got some value from this time. And on behalf of Jim and MEP, we look forward to helping you any way we can, support you, and help you grow your business.
Thank you.
Thank you.